Where's an asset allocator when you need one? Citigroup global strategist Robert Buckland asked that question in a report this week. To find out why, let's turn to Bloomberg columnist Dave Wilson and his chart of the day. Dave, what makes Buckland so interested in asset allocation here? It seems like a pretty old, traditional thing in this newfangled market of ours.
It's a matter of what kind of gains, perhaps, can you make from shifting your assets, specifically between stocks and bonds. You know, I ran the numbers based on a comparison that Buckland made between global stocks and 10-year treasuries. If you picked right from those two asset classes each year since 1990, your average return was something like 18%.
So just look at, I mean, we can take a look at the chart of the day here. Right. We've got it in the big media wall over there. Go ahead and look. There's been some serious discrepancies between the returns on the market and the 10-year. You wouldn't, though, just need an asset allocator, right? You'd need one who knows what's going to happen. Or
has a clue about it, at least. I mean, what you're seeing on the wall is basically the gap each year in percentage terms between the MSCI All-Country World Index, their broadest gauge of global stocks, and 10-year treasuries on a return basis. Last year, you see the incredibly big bar, 61 percentage points difference. So, you know, there's a lot to be gained from shifting back and forth. And, of course, you've got to have a clue about where to go. I mean, that's the real challenge of asset allocation. But Buckland kind of looks at it in the context of this is an exercise worth making.
Was he seriously suggesting that people go back and forth between global stocks and 10-year treasuries, that you continually rebalance your portfolio?
Not that strategy specifically, but he wanted a way to show that asset allocation mattered, that it was something worth doing. You know, his take is that investment firms don't really focus on that enough. They're kind of looking at things more on a micro level, if you will. You know, what industry groups to own, what regions of the world to invest in, as opposed to sort of the simple equation of, do I have my money in stocks or in bonds at any given point?
So what else was he looking at? I mean, was it only asset allocation that led him to this note?
Right. It was more sort of that level we're talking about with the regions and the industries. And he even got down as far as looking at, say, the biggest companies and what if you own the best performers versus the worst. So he's really kind of taking it from the top down to the bottom in the sense of, you know, what kind of allocation decisions you make. But the focus really was, we've kind of gotten away from, in a sense, looking at it at the macro level. I mean, that's one of the things he pointed out. And really, you know, given the gains that we've had, you know, perhaps it's time to kind of move down the ladder a little bit in terms of making those decisions.
And I think we probably will.
Indeed.
All right, Dave Wilson, Bloomberg columnist. The opinions that he expresses are, of course, his